Welcome to the Tax Sisters. Michael West. He's been a longtime friend of Basque Expertise and myself. We've worked together now, gosh, how many years?
Oh man, going back 10 years at least.
Has it been that long?
It's been about 10 years probably, yeah.
See, I was thinking 5 or 6.
Yeah.
I'm like, where does the time go? Oh
Yeah.
my gosh. Yeah, so way back. So Michael comes to us out of the banking world, everybody's favorite, right?
Absolutely.
Not Chase, not Wells Fargo, not Bank of America, but we won't name the bank. But you have a lot of experience working with business owners. That's kind of your thing, working in the business banking, business lending industry. So tell us a little bit about yourself, your background, and then we can kind of dive into like all that kind of fun stuff.
Yeah, so started in banking back in 2006, back during the real estate boom.
Seems so like not long ago.
Yeah, so started back in retail banking, worked my way up through into branch manager, and then made the transition just over 10 years ago to the commercial business banking side. And
So we must have met right on the early side of that.
right when I came on board
Get
to the
outta here.
you were probably one of my first clients I met when I came onto the business side. Yeah.
Crazy.
So and then looked into business banking and never looking back. It's a great place to be.
Wow, I didn't realize that it has been that long, but you know, Michael's made a big impression on me personally, like with all of his knowledge. So even back then, even you said you were new to it, like I would never have known. You have so much knowledge and understanding rather than just feeling like very transactional. And I really like that about you. That's probably why we've continued to work together and network and all those other kinds of things. But tell us a little bit about business banking. Like, what do people not know? Like, you know, when it comes to that whole world, that they're not. Because I think when we start talking about small business and entrepreneurs, they always think about their personal banking needs, not their business banking needs, and I don't think they realize that there's differences.
Yeah, absolutely. Big differences. Business banking is more of sort of a relationship, full picture type of banking. So whereas on the consumer side, you know, you're more focused on credit score, just what your W-2 is, and that's really what they're looking at.
Yeah.
From the commercial side of things, we're doing a deep dive into everything. I mean, we're looking at how you run your business. We're looking at your experience, how long you've been in the industry. We're also looking for your future growth. What are your plans? We really want to understand everything day to day, who operates it, who runs it.
And I think that's what gets lost in it, is because a lot of people think, well, I have good credit, or, you know, why can't my business take a loan? Why do I have to? And I do think a lot of what the bankers really look at, and I'm not going to say all banks because I know they're not all the same, but you know, they really take a much grander look at not just the financials of the business, but the overall picture of everything.
Yeah. I mean, really, every stone gets unturned when you're looking to get some sort of business lending. I mean, really, one of the things we're going to talk about today is, you know, financials and what banks look at for the financials. And it's not just if you're making money, but it comes down to understanding them, how clean they are. I mean, there's a magnitude of reasons why banks look at that, but once again, it's just a whole deep dive into
when you start with a business, I mean, I would gander that maybe one of the first things you're looking at is their financials, to even see if there's a prospect of moving forward with what their needs are, depending on what their kind of lending they're looking for. Is that correct?
Yes. I mean, the first initial conversation is really just getting to know the individual running the business. I mean, character plays a big part of it, making sure we know who we're doing business with. So it's more than just a black and white on the financial reporting, but after that initial meeting and we find out that there's a product or an appetite where we want to work together, we'll do a dive into the financials and quality. And I mean, it comes into one, making sure that they can afford to repay the loan, but also too, it's the risk management aspect, making sure
Yeah,
that
stay in
what
business.
what we're looking at is also accurate, and we feel confident that what we're reviewing is correct and allows the borrower to repay the loan.
So how do, in your experience, like what, I'm sure you've seen it all as far as what kind of comes through. Do you get a lot of, business owners just throwing Excel spreadsheets at you or bank statements or anything like
Oh
that?
man, I mean, I've seen everything from stuff written down on a piece of paper to just an Excel spreadsheet to a Word made into a PDF. I mean, seen it all.
And what does that tell you about the quality of like the business that you're working with typically? Like as far as like, there's got to be some preconceived notions.
Yeah, there's going to be, when we see something like that, there's going to be initial concerns.
Yeah.
I mean, the thing that I always say is business owners are very good at what they do, running their business, growing the business, handling the day-to-day activity. But when it comes to putting it on paper, it's a completely different animal.
Yes, because they don't, and I think in this world, we Kristen have talked about this a lot. We've kind of lately in the last decade just grown into this do-it-yourself world. That everything out there is a promotion of, oh gosh, you can do it yourself. I mean, you can give yourself an appendectomy if you want. I guess you could, but do you really want to? And I think a lot of that is just, it's kind of getting beat into everybody that QuickBooks is easy, or this is easy, and that's easy. And I know, and I find it interesting from your perspective because there's a few professional people in the commercial world that'll really look at things and be like, the financials tell a big story, obviously, in lending. So it's I like hearing that, actually.
Yeah, and going back to the quality of financials, I mean, the big thing with that is the reason the quality is so good, needs to be to a high level, is when we submit a deal to our underwriters, we're going to do a deep dive into everything, but when we're looking at the financials, we're going to have questions, right? So I'm going to have questions regarding understanding trends, maybe different add backs that we're going to add back in, one-time expenses. We're going to look at all of that, but they need to be clean and well prepared, because when we submit a package to underwriting, when the underwriter starts to look at it and management starts to look at it, if they start to see some inconsistencies or start to dive into some questions and not understanding them.
Or the financials don't match tax returns.
Correct. Yes, we've had that conversation before.
We have.
The more questions that underwriting and management has to ask, it just raises a little bit more eyebrows. Like, is this a deal we want to do? Maybe questioning the quality of it. So it's very important that we have clean financials and a conversation up front on that, because once you move forward, if questions start to come up, less questions always the better.
Or they don't have the answers and they say someone else did it, right?
Yeah. I mean, that's a huge one.
It's
a huge one, because even though you may hire somebody else, someone like yourself, to do the financials, I think it's very important for the client to really understand from a high level as to what you're doing. I also think there needs to be a conversation as far as like what the goal is. It's more than just putting numbers on paper. It's really understanding what their goal is and having that conversation and that open communication.
I can't agree with you more. I mean, I beat that down into a lot of my clients up front. We talk about goals and what's your objectives, and people will be like, what do you mean? Like, just running the business. I'm like, well, are you looking to minimize taxes? Are you looking to buy a house? Are you looking for lending for growth purposes? Are you looking and they'll be like, well, does that even matter? Because the financials are the financials, but it does matter because of the way they're looked at. And when you start thinking about lending, we'll tell people, well, if I knew you were buying a house, because no matter what I say, come January, February, March, while I'm in tax season, somebody's gonna be buying a house they didn't plan, or an investment property. And I think if they planned better in advance, you can organize people's finances in line with those objectives. And a good example of that is like depreciation, usually typically an add back for you, but if we take de minimis type of safe harbor deductions, we're expensing those, not good for lending. So there are options in how we account for things depending on how those objectives are. And I don't think that people realize that, because sometimes your tax objectives and your growth objectives can conflict.
100%.
Yeah. So.
Yeah.
So and you've worked with, I know, I'm sure you've worked with some really great businesses and stuff along the way. Have you worked with some companies that, you maybe started out with them as little bitty baby companies and you get to watch them grow? It's my favorite.
Yeah, absolutely. So with that being said, going back to when you talked about people doing their financials themselves, because it's easy. Well, okay, if it's just, maybe you and your spouse, or you're just starting off and it's a brand new business, and you're not looking to get lending, they can survive so long, right? But it's almost when you get to a certain size, first of all, I think it's imperative at all times to hire a professional.
I know.
At all times. But look, it's,
I get it.
Some people want to be consumers and they want to save some money, maybe do it themselves at first. But at a certain point, you have to hand the reins over to get to where you want to go. So it is important at a certain time. I'll bring on somebody who just creates an LLC and they want to go out and buy their first investment property or their first piece of equipment, or they want to, a small line of credit to, help their cash flow. And that's great. But as their revenue grows, as the business grows, they bring on more employees. They're at a revenue size now, watching them grow, where it's like, hey, you need to hand this off to somebody, because you come in, you're asking for larger loans. As the business grows, you're asking for more and more. So the more exposure to the bank, the more they're going to scrutinize and dig into your financial picture.
Yeah, we see that not just with you, with other people that are, my banker told me this, or my lender said I need this, and they didn't even think about those things. But my favorite is usually when, I'm not going to lie, is usually when people come in and they've done their own books, but then they ask for copies of the tax returns, and they're like, how come my tax return doesn't match my books? And be like, I don't do your books, or if you're doing them, you have to understand that there's a reconciling process to that. And, I think that's usually the number one I hear about getting caught off guard, especially people even buying a primary residence, but they're self-employed or running their own business. What kinds of, when you work with different businesses, there's different needs out there. Talk to us a little bit about some of the different kinds of products, whether it's equipment financing or property or building. I know you helped us with our building. There's different types of loans that businesses might be looking for. Obviously, some are going to be easier than others, or especially if you have something for it to put a lien on.
Sure.
So talk to us a little bit about some of that, because I know there was a lot I learned even then through the process of doing all the things I've done.
Yeah. So, when it comes to lending, I think most businesses for their first type of loan will come in and ask for a line of credit or equipment, or maybe a build out of an office that they're renting. A lot of those loans will be for the first couple $100,000. We'll place like a first position UCC on all business assets. And anything, once you start getting, every bank's a little bit different, but once you start getting over $500,000 in credit exposure, the bank wants to start looking at tangible collateral, such as residential real estate, even maybe a second on some sort of property, equipment. Maybe there's equipment paid off free and clear that they can take, and file a lien on that equipment.
What about when people are coming in and looking for, as they grow, they just, we run into a lot of businesses, like usually service-based, like AC companies and stuff, that they don't get paid fast enough. So they're looking for lending for growth, for operational funds and stuff. So how does that typically factor in?
So credit lines are going to be what the client's going to come in and ask for, that, a line of credit. And usually what the bank is going to look at is we're going to ask for like an aging 30, 60, 90 account receivables. And we're going to lend to a certain percentage of that. Most banks will go probably up to about 80%. We'll see high as 80% of what that account receivables less than 90 days. And that's also why it's also important to collect that within 90 days. Any client that pays outside of that 90 days, bank puts a whole line typically through that, and
So you
won't count that.
So those types of loans, are they higher interest rates? Are they? I mean, like how do you?
They're usually floated at prime or a little bit above prime. Probably somewhere. I mean, today's market, we're probably about anywhere from prime to prime plus one. So
What is prime
anywhere
today?
from today's 7.75, so up to about 8.75. And that'll float variable rate.
Hey, it's better than most car loans.
Yeah,
Seems like,
no,
really. I don't know.
8%,
It's-
7.75, 8% isn't. I mean, it's not a bad rate.
I keep
It's not
telling
a bad rate.
my kids, my grown-up kids, they're always just like, God, I want to buy a house, and the interest rates. And I'm like, these interest rates, although they're higher than the COVID interest rates and 2%, I mean, like, well, one, we'll never see that again in our lifetime.
That's the other thing. I
But
mean,
the
that
norm,
lasted.
but for that generation, that's all they know.
Right. It lasted so long. It wasn't just a year or two.
No, it was like
lasted
4 or 5 years.
Yeah, it lasted 4 or 5 years.
Yeah.
So if you came for your first business loan within the last 5 years.
Pretty sure I bought
And-
my first house at 7 3/4, and that was considered pretty average. So the rates right now, but you have to have lived through that to know that
Correct.
that this is probably more the norm than the past. And I think that is a very big mentality shift, but that also trickles down to new entrepreneurs and business owners, right? Because they're getting younger and younger.
Absolutely.
And I have a lot of clientele, a good percentage that are quite young, and they just have no understanding of like the long-term fluctuations in the financial sectors and stuff. And I find that interesting because you have to really work with them on like, this is not bad, and you have to kind of change a mindset, which is very hard.
Yeah.
Yeah. So, when you talk about, what are like the most popular products and types of loans people are typically looking for right now?
I mean, most popular what I'm doing right now, real estate, anything real estate related.
Still.
The thing with that is I'm still doing a lot of investment real estate, which you would think in this market, it's not out there. It's a little bit harder to find a great deal. And a lot of borrowers are having to put a little bit more money down to get it to cash flow because of the higher rates. So with the higher values and higher asking prices, higher interest rates, normally say if you go to 70-75% loan to value, we're probably coming in maybe 65, even 60% to get good cash flow on the property. So people are still out there buying, but it's just a little bit more challenging
I know.
to
I feel very
find the
lucky.
right deal.
When I got our commercial building here, and listening to you and refinancing it into a 15-year note when I did, and it was a really good rate, and gotta be getting close to halfway through that. So
Yeah.
but it's very interesting. So you're still doing a lot of real estate. I'm actually surprised by that, because I feel like you hear, and I work with a lot of realtors, so like obviously it's definitely in a decline right now.
So on the commercial, and that's the thing. I mean, once again, their mind goes to everything that they hear and see, which is residential related.
Residential.
So residential and commercial, once again, as I mentioned, it's kind of a different animal.
Yeah, sometimes
So-
when one's booming, one's in a tank.
Correct. So, I mean, look, we're not as busy by any means of what we've been, I mean, 3-4 years
I think
ago.
commercial real estate as well as residential, and eventually there's only so much growth that can happen out here, and we are just expanding and expanding and expanding. And I think when that new building, or building out in the boondocks basically is kind of coming to its end, the values are just you're not going to have anywhere to go but resale.
Yeah. And the other thing with that is too, I mean, it's also relative to, I mean, one, being in Arizona, we're in a market where Arizona is still growing, construction, everything's still happening here where it may not be happening in other parts of the country. Also, too, types of industries and buildings that people are looking at, like small office condos downtown. We're not seeing as much of that, with still some work from home.
Warehousing, I know, has been big.
Warehousing is big. Retail plazas are, strip centers, retail commercial
See,
plazas
I wouldn't think that.
are very popular. But I mean,
Are they just leveling them or something? Because
no, a lot of those are value add properties. So, for example, if there's 10 units in the retail plaza, maybe there's 7 tenants, and it's a little bit riskier, right? So it's going to take a seasoned investor to come in and go in and increase the rents in the existing tenants, and then hire somebody to fill the vacant units. So value add properties are very popular right now.
Interesting.
If something is fully occupied and cash flowing and it's an A-class property, I mean, very limited, hard to find, needle in a haystack, and you're going to pay top dollar where the cash flow is not going to be that great, you might have to come in with 40% down, 45% down to get a property like that to work.
Wow.
But you can come in with maybe, I wouldn't say less money down, but at the end of the day, a little bit less money down, that's a little bit riskier in a value add, but they're out there for the right buyer.
That's crazy. I wouldn't think about that as being something that was a really big investment type of draw right now. Just like just being a layman, walking around just going over to AJ's and get my iced tea at lunch or whatever, and half the places are closing, and sometimes some of these locations are so prime, like that's a prime location, and you wouldn't think that would be the case, but like just the way everything's changing, so it's good to know actually that that's not like disappearing slowly.
Yeah, I mean, it's definitely going to be more challenging for the client to find financing on products like those. I mean, every bank's going to be a little bit different as to what their appetite is. But I mean, if you find the right bank that can put a structure together, it's a good product and there's good opportunity out there.
That's pretty awesome.
But yeah, harder to find for sure.
Oh yeah. I'm not a very patient person with those hard to find things, so like it wouldn't be me. But hey, there's a lot of people out there though that are looking for those kinds of things, so that's really cool. So if you had like what's the best piece of advice you could offer to entrepreneurs or small business owners in regards to lending, growth, like basically how it relates to how they would acquire money or get lending and stuff. What's the best advice you could give?
Yeah, I think the best advice is surrounding yourself with a team of people that understand what your goal is, and they can each play an intricate part of that process. For example, I mean, finding the right bank to bank at is important. Finding the right banker. I mean, personality plays into a lot of it, and communication. Make sure you have good communication with your bank. And then also when it comes to, the financial reporting, I think having somebody that does that for you to make sure you're, on the right track. But also, too, I think there needs to be communication between all of those parties, not just the customer and the bank or just the customer and you. I think we all need to have conversations and meet to discuss, what the client's needs are.
And that's, I think you're like the third person I've talked to in a row. I got to look back at some of my podcasts that as they rolled out that has really just focused in on surround yourself with a good team or people smarter than you, good professionals, and it really stressed the how important that is. And I read a lot of business books, and I was talking with someone earlier about Think and Grow Rich, and which are personal books, which take that into your whole life. But I think it's neat to start seeing other people, especially after you've been around it enough, right? Even as an entrepreneur, because you don't think like that, but now you're like, when you got seasoned and you're got all these years and you talk to enough people, you're like, you can't replace the knowledge and surrounding yourself with people that know more than you.
Yeah.
You know?
I mean, and one of the things here, I may talk against myself a little bit here, but like when it comes back to being a business owner, and it's good to talk to more than one bank, right?
Mm-hmm.
Not every bank does it. Not every bank does everything. Not every bank is good at everything. I mean,
no kidding.
Every bank has different appetites. So, I mean, and it's also, I mean, coming down to being a smart consumer. Some banks are going to be better priced than others. Some banks have better deposit rates. Some have better loan rates. No bank has it all.
No, they don't. And that's the thing is like a lot of people tend to bank where they personally bank. You see a lot of the Chases and stuff. And then I swear, I don't know a business owner that banks with Chase who hasn't come across at some point and said, I can't stand Chase. Where else can I bank? They don't lend. They don't this. I mean, it's a great bank. We always say they have a solid business back end, which, you know, their investment in technology is you know, A+. But for small business, it's more than that, right? But they're not lending. They're not giving them the products that they need. And I think when you approach like your business and its needs as they grow, you might find that those banks aren't the best fit. And I think that's interesting.
Yeah. So. I mean, it's friendly competition too. I mean, if, you know, when banks compete, I mean, the client's usually gonna win there, right? I mean, if you just speak to one person at the bank and they give you your terms, like how do you know that's the best deal? How do you know?
Yeah.
So
just like mortgages or anything else, you gotta shop around.
You shop around, and I think, you know, having a relationship doesn't mean that you have to park your money at 5 different banks. That's not what I'm saying. But I mean, if you have a contact, know somebody there, open up a little account, stay in touch with them, talk market, you know, kind of talk shop, what you're seeing, what's working, what's going on. And you can bring that back to your bank when you ask for a loan, or you can, you know, shop the 2 banks together to try and get the best deal. So
I agree. I mean, it's like that with everything too, right? But also make sure you're comparing apples to apples, because that seems to be another thing that happens where you think you're getting one thing, but you're really not.
Yeah, no, absolutely.
Or it seems cheaper, but then, you know, like, I don't know, I think it's Bank of America, but I'm not trying to negative on any of the banks, but like, you know, oh, we're cheaper, or we have no monthly fee or a low monthly fee, but you can't do bill pay, or you can't do this, or you got to pay for this extra service.
It just, it just goes to, I mean, a big thing driver of that is you get what you pay for.
Yeah.
I mean, that goes for anything, whether it's your business, what you do, what I do. Cheaper isn't always the best.
No.
You know, there's usually a catch.
Yeah.
So you just got to be diligent and be smart. And like you said, it's not apples to apples, because even if I present my loan terms up against another bank, we're not going to match
it's
everything.
Be slightly different.
There's going to be, so you're going to have to choose which one works best for you. But it's very rare you're going to get 2 deals from 2 different places that basically are line item comparisons. They're going to be different.
So I kind of heard you say like a couple key things, like you were saying, know your goals. Like business owners, know your goals. Like, what are you trying to accomplish? Either whether it's just you need good banking terms, and these are the kinds of things you do. You want to deposit checks remotely. You want to do this. You want to you have a lot of cash. Some banks won't let you deposit a lot of cash, or all these things. Like, know what your goals are and where you want to go, so that you can find the right fit.
Yeah.
That's I know, really important. I think even above anything else, if it's not the right fit, it doesn't matter. Everything else doesn't matter.
Correct.
So I heard you say that, you know, and then really personal relationships and knowing who you're working with.
Yeah.
And contacts. And I think that's really important stuff. It was one of the, I know when I met you, you were working at MidFirst Bank, and it was one of the things that kind of drew me to that bank back then. And so I'm not doing a commercial for them either. But back then, I mean, I worked with them since they opened their first branches out in Arizona. So we're going back decades. Sure. But I always liked that they had a different take. It was more of a small bank feel, and I come from back east where that stuff was that was more important. That's, that was ingrained in our values. And so I like that because you can get that anywhere else. Not saying it's still like that, but that's what drew me. For me, I needed people to be able to communicate with, not machines, and personal relationships, as you can tell. Because even since then, we've met and we still work together a lot and value each other's knowledge. And I think that's really important. And that's what, good foundations are built on, right?
Yeah.
So,
Yeah.
yeah. So awesome.
Yeah. But just to add to that too, process is important when it comes to banking, and when you're having those conversations
What do you mean by
out in the
process?
market. Process, like you mentioned about automated, right? You don't want to talk to a computer, you want to talk to a person. It's big on relationship. So you also want to, when you're out there talking to your bank, you want to understand, hey, if I come to you for a loan, what's your process? Are you just,
Feeding into the automated
system? Are you just feeding it through the automated system, and is it spitting out a number? Or can you explain things? Who do you talk to?
That's a really good point.
Are they local? Are they out of state? I think all of that plays into it.
I think that's a really good point. And I remember, I go back too long. But I remember there was a time where I was banking with Wells Fargo. I think it went up over on Power Road, and they had business bankers there. And that might have been before I even went to MidFirst. But you had that personal relationship, and you could have those discussions about all of those things. And it's so lost now. I don't know. I guess my mind's a little sidetracked too. But yeah, good stuff.
Yeah.
Well, really appreciate you joining us today. I think there's a lot of valuable information. Michael's been great. I have asked him more questions than I care to count off the cuff. So, thanks for joining us. We appreciate all your knowledge, and thanks for being a partner with Bask.
Absolutely.
Awesome.
Thank you for having me.
Yay!